Welcome to the Commercial Property Podcast. My name is Suzi Carter. I am a chartered surveyor. I've been involved in commercial property in the UK for 30 years and I've done hundreds of commercial property deals. I'm here to be your guide through the commercial property market, whether you're an experienced investor or whether you're literally thinking about dipping your toe in the world of commercial real estate. I will be here talking to you about all kinds of things commercial real estate in the UK, and I've also got some fantastic guest experts who are joining me. So please do subscribe if you'd like to follow, and if you'd like any more help or information on commercial real estate, please do click www.suzicarter.com, which is my website, and you can find out all the ways I can help you. So stay tuned for this week's episode. Welcome back. So today we're going to be talking about how to find where to invest in commercial property. Now, all investing locations are obviously not made equal. And I think when I work with clients who haven't looked at commercial before, there's quite a lot of overwhelm about, well, where do I invest? And sometimes I do think we can overcomplicate this. So what I want to do today is break this down into some really easy steps that hopefully you can follow to find your investing location. So the fundamentals of investing is that, in commercial in particular, is that you want to find areas where the supply and demand is more in favour of demand. As a general rule, that's what we want to be doing. Now, that's kind of the starting point. For me, that is the absolute cornerstone. It's the fundamental of commercial investing. Now, obviously, you can invest in different types of property in a certain investing location, and you can actually create the demand. So what I mean by that is that you can potentially find a property that you can do something to create a property that's got where there's more demand. So an example of that would be to take a redundant single let office block and to that's now vacant and to multi-let it effectively, whether that's through flexible co-working space or whether that's through kind of a CMO or commercial and multiple occupation multi-let type space. Similarly, you could do that in retail, industrial, and in other sectors as well. So creating more demand. So why would we want to sublet that? Well, obviously every location is different and that might not work in every location. But the reason we'd be doing that is because there's usually, and again, there's always exceptions to every rule, but there's usually more demand at the lower end of the market for smaller space than there is for larger space. That's primarily because we're looking at SMEs who are looking at the overheads of their business and want smaller space to operate from. So what that means is when there's more demand, you look at increased rents and you look at better lease terms. And you look at longer leases and, everything, and potentially even better tenants. And that's the fundamental of what we're looking for really in commercial investing. We're looking for as long a lease as we can. We're looking for the best rent we can, and we're looking for the best tenant we can. And all of that, we don't just want just for the sake of it. We want it because that's how we're going to maximize our capital value. That's how we're going to maximize our investment effectively. So this supply and demand is the number one most important reason why you would invest in a market. And sometimes this is, how do you go about this? Sometimes this is trial and error. Sometimes you need to be looking in different markets, testing it, speaking to agents. But the number one bit of advice I would give to you is speak to commercial agents about different types of properties, ask what the demand is. It's so obvious when you're speaking to an agent when there is good demand, because they say, well, we've got people queuing out the doors for that type of space, or I can't find any space for all the requirements I've got, or similarly. And they'll also talk to you about the rent and the lease terms. So you want to be finding those areas where some supply and demand are good. And obviously, there's different areas where you can look for these telltale signs. You want to find areas. So, for example, if you look on high streets, in city centres, potentially where there's a load and load of retail and a load of empty shops, especially kind of the secondary, tertiary, my betting would be that supply outweighs demand. So you can actually physically see that. You can see that for other types of property, loads of office space on the market, loads of industrial on the market. Of course, don't forget that we can kind of use that office space or industrial or retail and subdivide it and create the demand. But, there's some really telltale signs that you can see. So a lot of vacant property of that particular type. Now, of course, that shouldn't necessarily put you off because you can repurpose property. But there's usually a reason why that hasn't happened. So if you look at a nice, wealthy southeast town, there's not that many empty shops, and there's been conversions of the uppers just because the gross development values work, the GDVs work, and there is tenant demand as well. Not everywhere, obviously, there's always exceptions to every rule. So we want to be looking at the fundamentals. So we look at vacancy. So vacancy rate is super important for retail. We look at footfall, seeing how many people are actually passing by. We look at the size of the high street. So I really like market towns because they have small high streets, and usually, if it's a good market town with good fundamentals, good socioeconomics, you will find that there are very few vacancies. And when vacancies come up, they will be let very quickly. So from a retail perspective, that's really good. Equally, you can use mapping packages like Nimbus and Searchland, CoStar, and find out the supply of different types of property in different locations. And, look at the local plans. If there's no industrial parks proposed in a particular location, there's only one or two. And I've seen that in some southeast towns where there's actually one industrial estate and it's always jam-packed because there's just no other planned. It's a really wealthy area. The council actually wants more houses, not more industrial. And there's no planning for the future, even though industrial is a growth sector. So, keep your eye out for those locations. And you will start to find it. But don't forget this point about creating property that's more suitable for the demand, because sometimes there's a lot of demand, but the type of property that's available isn't suitable for it. So this is where I work with my clients on giving them the knowledge of kind of where I see tenant demand happening across the country. And then they can start to look at repurposing space to create the demand rather than just buying existing property. So supply and demand, the absolute number one fundamental that we're looking for. And of course, if you are looking at locations, then it has to be suitable for your budget. So that can sometimes really restrict the amount of areas you're working in. Now, just as a little side note here, we must remember that obviously anything is possible. So even though you might not have the pounds in your pocket right now, you could work with investors, angel investors, you can work with JV partners, you can get commercial finance. You can do vendor finance, you can do options, you can do exchange delay completion. There's plenty of ways of structuring a real estate transaction without having to have 65% or 75% deposit in your pocket right now. But obviously, if you're just beginning, you might not want to buy property that's too expensive. There might be a sweet spot of property that you would like to buy. It might be you're buying in a SAS pot, a pension pot, and actually you have a restricted amount in there. You can only borrow up to 50% of your pot from your SAS pension. So there will be there may just be restrictions on where you're looking. So what I always say is draw a circle an hour from your home or from where your business is based, and look at all the different locations in that area. So, do some desktop research. And once you've done desktop research, there is nothing like getting out in the car, and we'll come to that later. There's nothing like getting in the car and actually going out and looking at real estate. I think we become so dependent on desktop research because there's so much information available to us. But don't underestimate kind of looking, touching, feeling commercial property. You really just get a feel of it. When I talk about footfall earlier, you can see how many people are passing the door. You can see how many shops there are vacant just by going to take a look or going around an industrial estate or whatever it might be. So draw this line an hour from your home, and then you can see about affordability there. You can look at whether it ticks any of the boxes of what I've been talking about, market towns, industrial estates where they're always fully let, shops or high streets that are always busy, great socioeconomic areas where, there's maybe the towns, or they bat above their weight because there's, massive houses around. Maybe there's some other factors that are influencing it. For example, an airport or a ferry port or a transport hub, or, a large railway station, or maybe a large employer or employers that actually has got kind of copycat businesses or kind of businesses that work with them located nearby. That very much is the case for transport businesses, airports, etc. But also, I live near Cheltenham, GCHQ in Cheltenham. It's obviously a tech-based industry, and there's loads of tech businesses that are located near GCHQ because it's GCHQ and they work with them, and that the kind of talent stays local. So kind of look at that kind of thing. Look at perhaps where there's been a lot of permitted development happened on Class E space, retail, offices, because sometimes that can mean that there actually is more demand for the retail and offices. Obviously, you could look at the repurposing, making them into residential. But actually, if you can literally just find an area where there's been a load of PD or permitted development conversions from offices, say, to residential, and there's a real shortage of offices, then is a great opportunity to get into the market and to keep offices as offices and just to let them, and maybe again create the space that the tenants are looking for, create smaller space from larger space, etc.
This episode is brought to you by Bond Finance Limited, your trusted partner for commercial property mortgage solutions. Are you an experienced residential property investor about to diversify into commercial property, looking for funding options? Bond Finance can help. Whether you're planning to expand, refinance, or make a major property investment, Bond Finance provides expert advice with access to a wide range of lenders, from high street to specialist. Book a free discovery session today to explore how we can tailor commercial funding solutions to your unique investment strategy. Visit www.bondfinanceltd.co.uk and take the next step in your commercial finance journey.
Yeah, draw this line an hour from your home or your business, and then obviously you can keep going further out if you need to. Obviously, you don't have to locate and invest close to home with commercial property. You don't have to do that at all. The reason for that is because there's full repairing and insuring leases, which means that you can be relatively hands-off with your investing. But when you're starting out, when you're starting to build relationships, when you want to go and do viewings, just be aware of the time commitment that it may take for you to remotely invest. So I'm not saying don't do it, far from it. It's very, very possible. But just be aware that you can get to know investing locations when they're closer to home. And when you might know the locations already, you're under the skin of it already. You're getting a competitive advantage already if you understand that investing location. Or you might want to invest where there's active sources in the market. So I've got several clients who are doing some sourcing in commercial, and they concentrate in a particular area. They found a niche that really works in that area. They're maybe subdividing space or creating space for suitable for the demand. And I've got several other clients who are working with them to basically invest in those locations or to do JVs. So that might be one of the reasons why you might want to invest in remote locations, because there's a particular reason for it. It might be that a remote location really well. You grew up there. Maybe your parents still live there. Maybe you've still got business connections there, or whatever it might be. But there's usually should be a reason for that. Or you might just understand a location and think, gosh, that is an incredible opportunity. So one of those, for example, is the Oxford to Cambridge corridor. The government seems to be really pushing that at the moment, especially for life sciences. They're talking about restricting planning restrictions. They're doing infrastructure improvements there. Obviously, it's got 2 big universities as well. And so question, is that a location to look at? Is that somewhere for you to look to invest? You may not live close by, but it's a relatively discrete area. And of course, that's a relatively wide corridor. So where along that train line or that corridor would you actually want to invest? But there might be really good fundamentals for that. The free ports, some of the investment areas. I mean, I wouldn't go rushing out straight after a government announcement about free ports or investment areas and, start buying property, because these things historically, A, may not happen, and B, actually may prove to be a bit of a damp squid. So, but obviously that again is another reason why you may want to invest more remotely, and that will just make sense. And you also may look at investing in locations where you've got JV partners, or you've got particular knowledge of a location. So, I'm not saying don't invest remotely, but there's got to be a reason for it, rather than scattergun investing, which in my experience and my opinion can often create confusion. It creates inactivity, and you can't get to know multiple markets at the same time. However, there is kind of one slight exception to that. There's always exceptions to every rule, right? So the exception to that is so obviously the way we add value to commercial property, if you've been listening to these podcasts, then you'll understand this, is that we look to perhaps buy a vacant property and get it tenanted. We look to maybe increase the lease length. We might look to increase the rent, or whatever it might be. We're looking to asset manage, and this can be paper-based asset management, or it can be physically letting a property, or creating the demand, like I've said, doing some reconfiguration or whatever it might be. Now, there's lots of brands, national brands, that are actually looking for real estate. Now, a lot of them do have agents that act for them. They also have in-house property teams, but they still have requirement lists. So there's a lovely website called www.therequirement.list that basically lists all of these by location and by tenant type, which is worth looking at. But you can also Google them. There's lots of big operators, particularly retail, hospitality, leisure in particular, publish these. Quite often nurseries as well. You probably won't find industrial, maybe even office demand from these lists. But if you're interested in the former, retail, leisure, hospitality, nurseries, then the requirement list and these published online requirements can basically show you where tenants want to locate. So they also have contact details of the property teams or the agents that are acting for them. So you can actually be tenant led. And because we add value by maybe letting a vacant property, if you can find the tenant first and target locations that they're actually looking for, then obviously you potentially can put the cart before the horse and find the tenant. Then you can source a property almost to order. Now, what you need to be careful of with this strategy is that you'll see that a lot of these requirement lists have got, tens of requirements on them. And of course, a retailer, say, can't open all those stores in 1 year. They've got limited budgets. So what you find is they tend to publish their requirements maybe for 2 to 5 years. And so what you need to make sure of is that you've not sourced a property in a town that maybe is at the back end of that list. And I've certainly been caught out by that in the past, but you need to find that out up front as to whether they're interested in, doing that this year and actually will move quickly, or perhaps you might have to wait. And of course, that commercially might not might not work for you. So sourcing to orders, sourcing to requirements can be a really interesting way of sourcing property. You can look at trade counters. There's all kinds of, food stores. They all operate things. They can be quite picky in terms of what they're looking for. So you need to be very clear about exact locations. They might have a town, but actually there might be a particular area of a town that they're looking for. And also be very careful about revealing the address of the property if you haven't secured it. If you own it, obviously crack on. But if you haven't secured the property, and if it's something maybe that's on the market or you're looking at off market, be very careful, because it's not unknown for operators to go and pursue this themselves. Certainly if they've got agents acting on their behalf, the agents may well go and do that. That's what they're paid to do. So the strategy with that is to say, are you looking at anything in this particular town? I may have a property that's suitable for you. Can I put an introduction letter in? And depending on whether you're sourcing for them and you want to get a fee, or whether you actually want them to come to your property, but you need to sign some of it kind of exclusivity or introduction agreement to make sure that they don't kind of pull the rug from under your feet on that one. So just a word of caution. But otherwise, this can be a really nice strategy, especially if you're doing off-market letters, you're doing off-market sourcing, because you might find properties that actually they don't know about, and that might actually be very, very suitable for their uses. So don't stop those off-market letter campaigns. They very much do reap rewards, and cross-reference kind of the areas that you're looking at with tenant requirements. So it can be a great strategy. Sometimes they can be quite long-winded. So, somebody like Lidl, for example, they're very specific about what they're looking for. They'll need to demolish an existing building. They'll need to go for planning. But, obviously the uplift you can get off the back end is really, really good. So location is really fundamental. Many of you will know, I used to work for Landsec. I was director at Landsec, and the former CEO of Landsec came up with the phrase, there's only three things that are important in property, and that's location, location, location. That came from commercial property. So it's just as true for commercial as it is for residential. Location is absolutely key, because retail tenants, for example, they want to be in peak footfall areas. That's why all the brands cluster together in shopping centres or in prime areas, because they're going to get peak footfall coming in, which means that more people are going to buy their goods. In industrial, you want to make sure that you've got accessibility to A roads or motorways. You want to make sure that you've got good accessibility, access roads, good parking, turning circles for yards, right eaves height, etc. So specification of building is really important, and also, very much the location, and offices potentially close to workers, close to businesses, or whatever the particular requirements are of that business. Very often close to the MD's home as well. That's funny how that works. So location is super, super important. And then you want to be kind of drilling down into the factors we've talked about today, the most important of which is supply and demand. So remember, commercial agents can really help you with that. Look at the prop tech. That can really help you with that as well. Things like CoStar, CoStar, for example, a bit of prop tech, expensive prop tech, but really good. Can basically you can identify lease expiries locally. And so you can find out, potentially where if there's tenants in similar units to yours, you can find out when their leases expire, and then you can maybe approach them to come in your property. So all different kinds of things. And remember the sensitivities for each type of property. GPs even, they want to be in a certain location near their catchment. They don't want to be outside of that. And they'll pay a premium to be in that location. Retail, footfall, location, or convenience, roadside retail or local shops, to be near population centres, big housing estates, or big clusters of housing. So lots of different location specific criteria. So when I work with my board members, when I kind of teach people on the CPA, we talk about each sector and what the operators are looking for, because ultimately that's what you want to be identifying in your property strategy. And I suppose the final thing to mention is that you must look at multiple exits. So whenever you're looking at commercial property, multiple exits is absolutely key to make sure that you are maximising minimizing your risk and maximizing your return. So, for example, if you're looking at a retail unit, could you let it as is? Could you subdivide it? Could you knock the back off and create a residential unit? Could you convert the uppers? You don't have to do any conversions right now, but that might actually be a get out of jail exit if you ever needed it in the future. So just make sure that anything you look at has multiple exits, and we'll talk about that in a later episode of this podcast. So thank you so much for joining me today. I hope that's been useful. Remember, location, totally fundamental, and I look forward to seeing you soon.